If China's economy was a dashboard, Evergrande would be the check engine light. The country's second largest property developer is over $300 billion in debt. Evergrande stock plummeted over 80% this year, with shares halted on the Hong Kong Stock Exchange this week, pending a, quote, major transaction. State media says the company will sell a majority stake in its property management business for over $5 billion. In short, Chinese investors are bracing themselves for a world of pain. But what we don't know is how far that pain will spread.
The S&P 500 closed at an all-time high today.
The Evergrande story has shown how much of China's rapid economic growth is fueled by real estate. The industry accounts for about 29% of China's GDP. But many properties were bought by investors without intention of living in them. About 20% of China's housing stock is unoccupied. That's space for about 90 million people, enough to house the entire population of France and still have extra. The Chinese Communist Party has been aware of this and created a policy last year called 3 Red Lines. This policy has 3 goals: reduce debt in the property market, crack down on reckless borrowing, and prevent a market correction from turning into a catastrophe. The company suffered a capital crunch, was forced to suspend construction, and delayed payments to suppliers. This leaves many prospective homeowners in limbo, investors holding the bag, and third-party employees not getting paid. So, the first big question: how exposed are US, EU, and other global markets to contagion if Evergrande collapses?
To be frank, and I think anyone who tells you differently is lying, nobody knows exactly who holds Evergrande securities in the United States. We know some names. People have come out with big names like BlackRock have said they have some exposure, but we don't know. And I actually think the uncertainty is more dangerous than if we did know. And this is what happened in 2008, 2009 in the United States. Nobody knew who had exposure to the bad debt. And as a consequence, trading froze up. And that systemically is much more destructive than a few people going bankrupt.
Lehman Brothers' role in the 2008 crash is often brought up in media reports as a comparison to Evergrande. But one major difference is Evergrande's current woes were triggered by government policy, and it remains unclear how Beijing would intervene to avert a global crisis, if they even decide to do so.
I think that there is a great deal we don't understand. And what we also don't understand is that the leadership in China is not exactly sure how to treat the market economy they have created. For instance, they realized that debt was excessive, and they moved in a very Chinese communist way to stop it. You can't have any more debt. Of course, that doesn't help. That means people who are strung out have no way to unwind.
Second question: how could Evergrande accumulate so much debt without alarming political leadership and regulators sooner? A central character in the Evergrande saga is the company chairman and founder Hui Kai-yan. Forbes estimates he is worth $11.5 billion, and calculated $8 billion of it is from cash dividends paid since Evergrande's IPO on the Hong Kong Stock Exchange.
He grew up, poor in China, and he's built this company up from the ground. He founded it in 1996, and it became, a really, successful developer. It built a lot of homes. It created a lot of jobs in China. That's opened a lot of doors for him, and he's been able to get connections and financing for more. And, at some point it just got out of control. And, he's the chairman of the company. He owns still 77% of its stock. But, the issue with that is he can kind of determine the company's corporate governance by himself.
It's been suggested in various media reports that Hui's political connections and elite status gave investors and creditors faith Beijing would continue to bail out the company even if things went south. But it now appears that patience is running thin. Finally, what does Evergrande tell us about the big picture of China's economy? Well, rapid and continued growth eventually meets its limits, and having a real estate bubble disproportionately drive growth was bound to have consequences.
Whenever there's a boom, people overextend themselves and China is going to face that. It's not just Evergrande. In fact, a deep worry in this situation is that there are many Chinese companies who have followed that model and are in trouble right now. That extends the danger not only throughout China, but across the ocean. The objective here for Beijing or any authorities is to ease the system's way out of this problem, not to punish it, not to approach it with a heavy hand.
Whether China moves ahead with that approach remains to be seen, but it's clear the weeks ahead will put the world's second largest economy to the test like never before.